Good morning. Welcome to the TRG Money Minute. I'm Devin Shute. So the South African Reserve Bank last week surprised most economists and it announced a reduction in interest rates, with possible further reductions later this year. While inflation continues to remain benign, the Reserve Bank is attempting to assist in getting the growth flywheel turning faster. But importantly, this is only really going to have an effect when structural reforms and the tough decisions to accompany those are implemented. These will allow us to get the growth rates of above 3% that we need to adequately address our debt and unemployment crises. South African Airways will continue to fly today, despite the great uncertainty that remains for the airline. The business rescue practitioner was given a deadline of Sunday evening to curtail operations if the funding had not been received. This deadline has been extended this morning as the airline awaits for National Treasury to come up with the required 2 billion rand. Last week, we had updates out of the South African retail sector, and here we saw retail sales for November had increased more than expectations, and this was primarily due to the increasingly popular Black Friday and the discounts there. However, the overall retail sales year is expected to remain weak as South African consumers feel the pinch. Looking at some South African retail companies that released updates last week, we saw that Foschini and Mr. Price were growing at acceptable rates. This was primarily due to international expansions, a focus on cash sales, as well as strong cash management. That's it for this week. Don't forget to subscribe and like. Have a good one.